something like half of the entire cost.
That cannot be good. Bro, one thing shakes and the entirety of South Korea's economy blows up. So, like, what is happening with South Korea right now? Because I've been hearing, like, basically on my regular YouTube channel, I saw this video and god damn. So South Koreans are going crazy with their own stock market. I think they like almost 2x'd it, especially with the Samsung like stocks and I want to say Micron, but I think that's US based. But let's get straight into it.
The South Korean economy is having a wild time at the moment. GDP is booming. Two of its
Yeah.
biggest companies, Samsung and SK Hynix, recently entered the $1
Okay, those two, bro. I'm hearing that they're doing leverage bets on those, and the moment those slip, like I'm hearing that it's just gonna be over for them. Like they're gonna be in debt.
trillion club. And bumper profits mean that tens of thousands of Samsung and SK Hynix employees are due multi-million won bonuses this year.
Damn.
However, peek under the proverbial bonnet and things quickly start to look a bit shaky. So in this video, we're going to look at South Korea's economic boom and why it's both more imbalanced and arguably more bubbly than it first appears.
I mean, I never seen such a line go straight up before. Like it's just pure vertical.
Anxieties about material self-sufficiency, a turn towards protectionism, great parallels between now and then. Taking the
Yeah, I'll be honest with you. Though, right around when I want to be an adult, your shit just starts kicking off for no reason.
Expect South Korea's growth.
There you go.
Having grown by about 1% in 2025, the OECD expects South Korea's growth rate to nearly triple in 2026, forecasting GDP growth of 2.6%. This becomes even more impressive when you factor in the fact that, thanks to its incredibly low birth rates, South Korea's population is already shrinking. This implies that, on a per capita basis, South Korea's economy is expected to grow by nearer 3%, which would be one of the highest rates in the OECD. Furthermore, this could plausibly be an underestimate. In just the first quarter of this year, South Korea posted GDP growth of 1.7%, which would translate to an annual growth rate of about 7%. This was largely driven by exports, which rose by 38% year on year, but these show no signs of slowing down. More recent data suggests that exports actually extended their momentum in April and May, suggesting we should expect some pretty impressive GDP numbers for the second quarter as well.
I mean, but how much is that based off of pure AI investment and hype?
Anyway, as you might already know, much of this economic boom is being driven by AI. For context, South Korea dominates in the production of certain high-end memory chips. The AI boom has created massive demand for these chips, and this has given way to an export boom, which has been the main contributor to the impressive GDP figures. Again, at first,
you would think they would have something for that, you know?
At first glance, this all looks dandy. However, there are two big caveats worth mentioning here. The first is that this boom is incredibly narrow. While the AI-adjacent economy might be doing all right, the rest of the South Korean economy isn't in great nick. You can see this clearly if you disaggregate South Korea's production index. While chip production has boomed, the rest of the economy has now been stagnant for basically 3 years.
Damn.
Furthermore, most of South Korea's AI boom is being driven by just two companies, namely Samsung and SK Hynix. Both companies are now valued.
I mean, I know what Samsung does. What the fuck does SK Hynix do?
At over $1 trillion, or at least they were before Monday's correction, and are expected to rake in $200 billion and $140 billion in operating profit this year, respectively. If these numbers hold up, this would make Samsung the second most profitable company in the world after Nvidia, and put SK Hynix comfortably in the top 10, behind only the most profitable US tech companies and maybe Saudi Aramco. If they don't, however, and something goes wrong for either, this could be bad news for the South Korean economy more generally, given that they together account for something like half of the entire cost.
That cannot be good. Bro, one thing shakes and the entirety of South Korea's economy blows up. I mean, I'm not saying it's a good thing. I'm just saying, like, it's just funny times we're living in.
South Korea's main stock index, and a non-trivial fraction of South Korea's entire GDP. The second caveat worth mentioning is that parts of the South Korean economy are looking suspiciously bubbly. Obviously, if AI ends up being a bubble, South Korea is very exposed. But
Very exposed, they're fucked. Okay, they're not just exposed. They're going down with everything.
even if
Now imagine the AI bubble pops, and then Japanese bonds start slipping. That actually might be recession, especially if the Middle East reaches wider. I mean,
AI ends up being half it's cracked up to be, the Kospi looks pretty crazy,
Yep.
and has now risen by something like 200% in just the past 12 months.
damn.
Even if you're a die-hard AI bull, it's hard to deny that a 200% rise in barely a year looks pretty precarious. If this is a bubble, and if it does burst, it could be terrible news for the South Korean economy, in part because foreign investors have actually been selling Korean equities this year. 60% of the market is held by domestic investors, which means that a sudden downturn could wipe out Korean savings.
Yep.
The other bit of the economy that looks a bit bubbly is the housing market. The Korean housing market was already looking bubbly.
I mean, let's be honest with each other. Like, you and me. Houses are meant to house people, not as a speculative financial asset. And like, you can't really be mad when that shit collapses, because it only works if people think land is valuable. And like, you can't really speculate on land if you're struggling to survive.
Before the AI boom, Korean households were already some of the world's most indebted in the world
Damn.
before the pandemic, and prices surged further during and after COVID. National level data arguably underestimates the severity of the crisis.
Oh yeah, I have an article for that because I'm prepared. Give me a second. Okay, there you go. Exposing how borrowed bets by a swelling wave of retail investors known as ants are chasing a runaway stock rally and rattling policymakers wary of sharper volatility and painful corrections. A Bank of Korea, BOK, reported on Thursday showed leveraged investments into equalities by retail investors topped a record 60 trillion won, or really $39.06 billion as the end of May, as the KOSPI, I don't even care to pronounce that, more than doubled in just 6 months to become the world's top performer. Now, I just want to say, imagine if that shit blows up. So not only are you going to be in debt, you're going to be in massive debt. Because not only are you leveraging your bets by taking on the debt, you probably have credit card debt, other stuff like car loans, housing mortgages. So they better hope and pray everything works perfectly. Because this seems
because basically everyone in Korea
right.
apparently wants to move to Seoul and the surrounding metropolitan area, where houses are even more expensive. Astonishingly, more than half of South Korea's population now lives in Greater Seoul, a concentration of people.
Hello, you beautiful people. Now, you're at the point of the video where I would like to ask you for a like and subscribe. If I did do good, please leave a thumbs up on that video and hit the subscribe button. I think if you're on Twitch or yeah, go to my Twitch. Okay, I'm a bit jumbled. It's whatever. Like and subscribe to the video, please. Okay, I'm back. But my little brother thought it would be the bestest of ideas to bust in my room. Certified yapper, he is.
In a single metropolitan area unmatched by any other advanced economy. The political class knows this is a problem. The president, Lee Jae-myung, recently described Seoul's white-hot property market as the fountainhead of all Korea's problems and a ticking time bomb.
Yep.
Unfortunately for Lee, after a slight correction in early 2023, the AI boom looks like it might reinflate the bubble.
Damn.
This is in part because the stock market boom has made Korean savers richer, at least on paper, and they are, judging by the recent uptick in prices, ploughing some of that newfound wealth back into housing. But it's also because of the massive bonuses that both Samsung and SK Hynix are currently paying out to employees. For context, both companies have recently introduced bonus systems that essentially channel 10% of all operating profits to an employee bonus pool, which is then distributed once a year as a percentage of base salary. As operating profits have skyrocketed, this has led to some insane numbers. SK Hynix's 35,000 employees received a bonus worth on average about 100,000.
Damn. Hold up. Give me a second. Okay, I won't be able to see this, but 35% times 100,000. That means, hold up, how many zeros is that? One, that then carry the three. You got 1,000, 10,000, 100,000. 1,000,000, 100,000,000. I hope this is in won. I really hope. Yeah, 100,000,000, and then a trillion. So okay, that's 35 trillion won. I hope, because if that's dollars, then I don't know where they got their money from.
$1,000 last year, and that's expected to rise to something like $500,000 this year.
Damn.
Similarly, the roughly 78,000 employees
Apparently, I'm just not in the right industry. I'm not in that industry. I'm poor. I'm broke.
working in Samsung's chip division are expected to receive an average bonus of about $400,000 this year, meaning that Samsung and SK Hynix will collectively pay out bonuses representing more than 1% of South Korea's entire GDP. This is obviously great news for workers, but chances are that a fair bit of this money will be ploughed back into Korea's housing market, reinflating the bubble. There's evidence this is already happening. House price gains in Yongin, where SK Hynix are currently building their new corporate cluster, accelerated after the company paid out last year's bonuses, with the rebound later spreading towards nearby Dongtang. These bonuses could also put upwards pressure on inflation, which is already running well above target at 3.1%. Now, the natural policy response here would be to raise interest rates, which should encourage some of this money into cash savings, and thus mean less money being ploughed into housing and lower inflation. But the problem here is that higher interest rates would also do damage to the non-AI bit of South Korea's economy, which is already struggling.
Ooh.
This interaction between our two caveats is the fundamental reason that the Korean economy looks
So, like, they're damn if they do, damn if they don't. Yeah, I'm not gonna lie. I couldn't fix this one. Most importantly, I'm not even a politician.
shaky. It's not just that it looks bubbly, it's also that it's too imbalanced for the usual policy remedies to be applied straightforwardly. When a story like this breaks, the headlines aren't just fast, they're fragmented. Depending on where you get your news.
Yep. And then let's move on to this one, because this is
On
part
Friday,
of the,
Elon Musk
AI bubble.
SpaceX, currently the world's most valuable private company, is going public via a listing on the Nasdaq.
Well, let's be honest. I'm not gonna say it's gonna flop. I'm just gonna say, like, I don't think it's gonna do as well as people assume it would.
Under the ticker SPCX. If all goes to plan, SpaceX will raise $75 billion at a valuation of about $1.75 trillion, making it, by some margin, the largest IPO in history. The listing has generated some predictably breathless headlines in the financial press. According to the Bulls, it represents a once-in-a-generation opportunity to invest in the world's first truly extraterrestrial company. But
I wouldn't go that far. Now.
it's also generated a fair bit of skepticism on the other side, and not just because the numbers involved are optimistic, to put it mildly. So in this video, we're going to explain why at least some people think the SpaceX IPO looks a bit dodgy, and why, from a certain vantage point, it's not obvious why SpaceX is even going public in the first place.
Hey, I need some more money. Have you not seen the deficit they're running? They need to find some way to recoup it back. And they're looking at the common people to do that. And other big investors too, but
Anxieties about material self-sufficiency are turned toward than you'd expect. So go over there and subscribe if you want to be notified when we do. Anyway, as we see it, there are at least 3 reasons you might be a bit wary of the SpaceX IPO. The first and most obvious are, well, the numbers. In short, the implied valuation of $1.75 trillion is about $500 billion more than the $1.25 trillion that private funds who are already invested in SpaceX currently price it at. Nearly 5 times the $400 billion or so it was valued at only last year, and would make SpaceX one of the most valuable companies in the world. This is despite the fact that, unlike basically every other company on that list, SpaceX currently makes a loss.
Yep.
Specifically, SpaceX made a loss of about $5 billion in 2025, and has already burnt through over $4 billion in the first quarter of this year. To put that into context, Meta, which is currently valued at about $1.5 trillion, made a $60 billion profit in 2025. Even if you just look at revenue, things don't look great. SpaceX took in slightly less than $20 billion in 2025, which means Musk is asking for a valuation more than 90 times the company's revenue.
Ooh.
For context, no other company in the $1 trillion club has a price-to-revenue ratio anywhere near that. The second reason is that it looks like SpaceX underwriters are talking it up, to a suspicious degree. For context, people often talk about an IPO as if the company in question just creates a bunch of shares and then sells them directly to the public. But the actual process is slightly more complicated. Before the shares are actually available to the public, the company hires investment banks, known as underwriters, who become responsible for both pricing the IPO and finding what are known as the initial buyers, usually financial institutions with a pre-existing relationship with the bank, who buy the majority of the public shares. Anyway, in SpaceX's case, the main underwriter is Goldman Sachs. There's nothing wrong with this per se. The dodgy bit is that it looks like Goldman Sachs have been trying to generate positive headlines for the IPO. A couple of days ago, for instance, someone at Goldman apparently leaked some super bullish forecast to the Financial Times, under which SpaceX...
Bruh. That has to be a lie. That leak would be a strong word.
SpaceX's AI revenue would increase 100-fold by 2030, and its total revenue would increase 25-fold over the same period. A day later, Morgan Stanley, another bank that's acting as a junior underwriter on the IPO, leaked an even more bullish forecast to the Wall Street Journal, claiming they could see SpaceX's revenue reaching $3.4 trillion by 2040. For context, that would be about 200 times SpaceX's 2025 revenue, and far more than any company today. Now, to be clear, underwriters do often produce optimistic projections when they're selling a deal, and that is, to some extent, their job. But they don't usually leak the most optimistic ones to the press just days before the IPO is due to go live, and these projections look speculative to the point of suspicion. The third and final reason we might be wary is that it looks like SpaceX is going to be fast-tracked into various index funds. For context, an index fund doesn't pick stocks, it just buys every stock in a given index, in proportion to its size. Usually, indices have what are known as seasoning windows. In other words, they don't let new companies into the index until they've spent a bit of time on the public markets.
Yeah.
The S&P 500, for instance, which tracks the 500 biggest companies listed in the US and is the most popular index in the world, requires 12 months, as well as quarterly profits. Similarly, the Nasdaq 100, which tracks the 100 biggest companies on the Nasdaq Stock Exchange, has historically required a waiting period of around 3 months. The dodgy thing here is that a number of big indices have recently changed their entry rules, presumably to allow SpaceX in early. In March,
Yeah.
for instance, Nasdaq introduced a new fast entry rule, which would allow SpaceX to enter the Nasdaq 100 15 trading days after listing. Since then, FTSE Russell, MSCI, and CRSP, whose indices are tracked by trillions of dollars in assets globally, have all confirmed new fast entry rules that are clearly designed to get SpaceX into their indices early. Collectively, these rule changes mean that at least $20 billion worth of passive money will be redirected into SpaceX stock
That's kind
in
of
its
fucked.
first few weeks of trading. This looks a bit like SpaceX and Musk, who initiated discussions with major index providers back in February, are pressuring indices to change their rules in order to essentially take advantage of passive investors. Now, at this point, you might be thinking that the implication here, that big tech companies and banks are trying to take advantage of passive and retail investors, sounds a bit conspiratorial.
I mean, I wouldn't say all that.
And well, it does, but it's worth asking, why else would SpaceX be tapping the public markets? After all, it's not like SpaceX struggles to find lenders in the private markets. Financial institutions like private equity and hedge funds have proved willing to lend at competitive rates and generous valuations. In fact, SpaceX and other big private companies were finding it so easy to find lenders in the private markets that, until only a year or so ago, lots of financial commentators were suggesting that public markets might be becoming redundant. In the past, listing on a stock exchange might have been the easiest way for a company to raise large sums of money. But these days, the argument went, because the private markets are so deep and well developed, companies can raise absurd sums without the hassle of going public, which means regular audits, financial statements, and more public scrutiny generally, hence the paucity of IPOs between 2022 and 2025. The question that SpaceX bulls have to answer is, what's changed? Why has SpaceX decided to move from private to public financing, if not to exploit the apparent naivety of retail investors and the inattention of passive investors? Maybe there's a good reason. Maybe it's just that private markets couldn't find the billions required for a Mars transportation system, satellite networks, and off-world settlements. But on the other hand, maybe there isn't. When a story like this breaks, the headlines aren't just fast, they're fragmented.
Well, I'm gonna leave it on this, but it doesn't really. I'm not too optimistic. Like, the only reason I feel like SpaceX is going public is because of its like worthless AI that is trying to push on people, and then South Korea's economy is looking very bubbly, and they're doing a bunch of leveraged debts out there. So, like, I'm not saying we're in a bubble or we're at the beginning of a recession, but come on. It's getting pretty close. You can only change the definition so much.